All right. Well, good morning, good afternoon, or good evening, and welcome to the June 2021 Accounting Working Group podcast. I'm your host, Dr. Sean Stein Smith, and actually, I wanted to carve some time out during our current podcast right now to actually talk about our most recent publication, our DeFi primer, published in partnership with our friends and colleagues at both the AICPA and at CPA.com. So, with all of that out of the way, I'm going to actually pull up our actual white paper right now. And if you are interested in actually having this white paper, which hopefully all of you are, it is right on the homepage of WSBA.co right here. So if you are interested in having access to the actual document, it is right there, easy to find. And so and so honestly, this whole concept of DeFi, right, the decentralized finance, is honestly probably one of the hottest topics that has popped up in the broader blockchain crypto asset space, right? Obviously, there are headlines around Bitcoin, various countries adopting Bitcoin now as legal tender and all of that. But outside of those headlines, of those sort of hot topic buzzwords and all of that, this whole movement towards DeFi really is a underlying sort of driving force, right? Both towards wider blockchain onboarding, blockchain being used by enterprises, and then also in terms of the corporate accounting, as well as audit questions linked to this whole area. And so really our most current application right here, our DeFi primer white paper, is really a excellent, well, I think, a excellent sort of document trying to present a overview, right? Obviously, the whole DeFi area is incredibly fast moving, complicated with a lot of moving parts. So while our white paper primer is not a obviously exhaustive document trying to analyze every single aspect of this area, it honestly gives anybody who's in the accounting, audit, tax area a good overview and a solid foundation to try to really one, try to get a handle on this area better, and to two, be able to be proactive, right? If you are talking to internal colleagues, external clients on this topic, to be able to ask the right questions and more sort of pertinently, to be able to answer questions asked of you by them. And so, with all that out of the way, there were a few key areas that I did want to focus on here. We have our nice introduction, and honestly, right, what is this whole topic, right? The whole topic of the whole area of DeFi is this effort underway to try to duplicate, replicate, emulate the products, services, access, all the rest that up until now have only been available by major financial institutions, right? And to try to sort of carry that over to the blockchain space. And that's probably the best way to try to frame it, introduce it, and to add some context to what otherwise could be kind of an abstract idea. And so our primer sort of introduces the idea of DeFi, tries to sort of put a working definition in there, and honestly tries to add some extra context, add some extra background to an area that has quite quickly moved off of the back burner onto a front page sort of top of mind area. And really sort of building on this background definition is really this idea that even though Bitcoin obviously gets the headlines and all of the buzz and all the rest, that a bulk, not every one obviously, but a good chunk of these DeFi applications don't really have anything to do with Bitcoin. And so that's really a interesting, I think, bifurcation, right? Currently going on in the broader ecosystem. That obviously Bitcoin gets the headlines, gets all the focus. There is this whole other aspect of blockchain crypto assets being developed, used by commercial enterprises, individuals, all the rest, that really is not linked directly to Bitcoin at all. So I would say that's really a core takeaway here for anybody trying to get a handle on this topic and trying to be able to have a conversation, again, either internally or externally, as to how this area is different from just the Bitcoin conversations. And so, a other aspect of DeFi, right, is that really it's almost a pushback to what has been argued has honestly been a pivot towards a more centralized institutions, applications, starting to some would say dominate the broader sort of crypto asset space, right? Be it Coinbase, be it other sort of centralized platforms of that kind, there has been a push towards more control, towards more entities kind of having a centralized influence over either trading, issuing new coins and tokens, or other aspects of the rapidly developing crypto asset space. And so, we also wanted to put in here, just a few of the examples and offerings out there. Obviously, anybody who is, educated and informed and active in this space knows there are any number of other applications and other possibilities out there. But to again try to add some context, to add some background to actually for what DeFi means in terms of how it plays out, we also did include a few examples here. Are we talking about yield farming? Are we talking about, for instance, crypto staking? Or, or are we talking on some other aspect of DeFi, right? And there are any number of other applications out there, but the two easiest ones to try to get your head around, or to try to talk to a external client about who could possibly be not as expert in this area as all of us are, to try to sort of introduce them to this idea. And it's also quite interesting that even though the whole idea of DeFi is to obviously be decentralized, Coinbase, which is again sort of the headline name that everyone knows, right, is actually offering services in this area currently as well. So it is going to be interesting, I think, to try to see over time how this develops, right? Are there going to be truly decentralized firms out there in charge? Or is this idea of DeFi going to basically turn into just a product or a service offered by some of these centralized players out there? And then we have a conversation around sort of the proof of stake argument, which has been getting quite a bit of folks lately, certainly as the conversation around the environmental impact of mining and proof of work has moved again back off the back burner and onto the front burner, which I do know is a very nuanced topic, but it has moved there. So it's important to always keep in mind that, again, the bulk of these DeFi applications are not always linked to Bitcoin, proof of work, mining, and all of that. So in terms of sort of a conversation here, those are key points to raise. Now there's crypto lending also, which is a very hot topic right now. And this whole idea of a DEX, right? Sort of a truly a decentralized trading platform, which is actually quite interesting. Again, trying to draw the contrast between institutions and entities like Coinbase, right, which everyone knows, to the truly sort of decentralized alternative to that. And then our paper also tries to add some extra depth, right? Because it's always good to have a high level overview, have some terminology, but it's also good, I think, as well as the co-authors also did, to try to take a more in-depth look at a few of the examples out there. Now, obviously, there are dozens, hundreds of firms all offering various DeFi services, and applications. And so the point of our examples here was, again, not to be a exhaustive listing, but to be just a introduction and an overview of the few of a few of the higher profile, sort of higher impact options out there. So we talk about MakerDAO, which I always think is quite interesting, just in terms of sort of how it works, in terms of having crypto backed by crypto, how how these coins and tokens are actually traded back and forth for each other. I've always actually found that quite interesting ever since I first heard of it. So it's quite interesting, and I even added in a image here. It isn't the best one ever, but I do think it helps to illustrate how the sort of DeFi cycle works here. But there are always other options out there. I'd say BlockFi is probably the option that, or the entity that has gotten the most coverage, the most conversation on it. There has been quite a bit of conversation currently on the interest rates offered at companies like BlockFi. Are they actually as good as they appear? But as always, it's always up to the investor or the firm to do their own homework on any option prior to allocating capital, right? But ultimately, BlockFi is a big player in this space. It has high name brand recognition, and so it was a good entity to include in here, right? So they're going over basically how to earn crypto on your crypto, which again is trying to emulate, trying to duplicate some of the aspects of traditional fiat banking, fiat savings accounts, money markets accounts, and all of that, but to do it in crypto, right? And to earn your interest and your return on your crypto on deposit in that exact same coin or actual token, which I think is quite interesting, and really is a way that if you or a firm, external clients wanted to transition over to more crypto-based payments and all the rest, that actually you are able to, one, actually take crypto as a form of transactional medium, and then also earn a rate of return on that also. And so then we also talked about Compound, which actually I personally had not heard too much about prior to actually working on this document, but it's a very interesting concept here, and it really sort of almost builds on what the idea of, let's say, BlockFi was. Now, obviously, there are some differences, but it really does expand upon the offerings and the options offered at BlockFi, including some of the lending, earning interest in the form of your token on deposit, and to try to really, again, sort of build out a crypto-based banking, lending, sort of financial system. But obviously, I try to be optimistic and upbeat, but there are going to be challenges out there, right? And anybody who's in the space has been trying to deal with obstacles and challenges, including these, but there are always others, right? So again, the whole goal here was to try to sort of highlight, try to point out a few of the higher profile issues that really any entity in this space or any enterprise trying to use DeFi at that commercial level are going to be facing, right? Both now and going forward. Obviously, trying to get it to work at that commercial level, right? We're trying to have the capacity or scale to actually work at that commercial level. Now, there is Ethereum 2.0, Lightning Network, that are possible solutions to this problem. But it's always good to understand sort of how the price of the coin or token in question can impact the performance and the transactional processing of any network, right? Be it the Bitcoin blockchain, Ethereum 2.0, or some other network out there. Now, I probably don't have to dwell on this other point too much. Crypto does have a tendency to be relatively uh, volatile, right? There are dramatic price ups and downs in the space, and all of that is, I would say, perfectly natural for any new asset class, for any new technology. We're trying to really find its home, trying to find its sort of footing in the enterprise area. That said, it is still a obstacle and a challenge that any enterprise has to be able to be on top of going forward. And then just the guidelines, frameworks, I would say the best way to try to summarize this right now is that it's a patchwork. I'd say is probably the kindest way to point out how different authorities, policymakers treat crypto of all kinds, right? Be it DeFi, be it NFTs, or some other options out there. And so now if we do actually want to pop the hood on a few of these issues, right, from a policy point of view, because obviously there are some folks out there who are not a fan or a supporter of any rules or of any policy maker oversight, but from a more practical matter, there is going to be oversight, right? There is going to have to be some interaction and some back and forth between the entities out there, users of these products and services, and the policymakers. And so just a few of these out here. KYC, AML is a pretty obvious problem that has been popping up over and over again. Although, I'd say thankfully, the questions are becoming more nuanced, and I would say more in depth, as opposed to just saying, well, if it's in crypto, can't trace it, it's only used for criminal and other bad activity. That is obviously not true. But that said, if you are partnering with an entity in this area, or you are trying to use one, or you are a entity in this sort of DeFi space, I mean, AML and KYC are items that you're going to have to keep an eye on. And if you are trying to audit or to provide any assurance over companies in this space, I mean, those are items that are going to have to be top of mind. The whole question around qualified custodians is a question and an item that I would say becomes more complicated every single day, right? The OCC back in the back half of 2020, the first, I'd say, month or so of 2021, tried to issue some more transparent guidance, and there have been any number of banks and other financial institutions, including BNY Mellon, that in the interim have actually started to offer clients crypto custodial services. Now, all of that is great, but as always, it's on us, right? As the auditors, as the external assurance experts, to try to sort of help our clients understand how this actually works, right? Because every institution is different, every entity is different, and every client is going to be approaching this with a different outlook. And so honestly, that's probably the sort of core takeaway here. And then our friends in Wyoming, as always, are out front, right? Are really sort of doing some great work out there. If you have not had a opportunity to go and look at what they're doing, I mean, it's truly, I think, very, very cutting edge in terms of how they're trying to take a practical approach to having rules, guidelines that, on the one hand, try to sort of level the playing field, make sure everyone knows the rules of the game out there, but also don't try to be too heavy-handed, nor accident to stifle any of the innovation and creative spirit, right, in this space. Policy Acts, the STABLE Act, has not moved out of committee. yet, but that is a item to keep an eye on, that especially as more and more banking institutions, other enterprises, entrepreneurs, individuals want to use either Bitcoin or other privately issued stable coins, government issued coins, that there is going to be this whole conversation around, okay, fine, how is this actually going to be treated, right? How do banks actually have to prove custody, prove reserves, prove anything else linked to it? So it is a item to try to keep an eye on, especially uh, in the broader DeFi space, which again, the whole aim of it is to try to replicate the products and services of incumbent fiat banking institutions without the banks. So it's definitely a area to try to keep a eye on. And then obviously there are not too many answers here, right? So if you were hoping for some answers, sorry about that, but there are questions, right? In terms of, okay, fine, how is this all going to be treated? And anybody who is in this area knows that there are endless questions, that there are a handful of answers and a handful of kind of quasi answers out there in terms of, okay, fine, how do we actually treat this stuff, right? Both on a asset valuation point of view, and then also how do we treat any earnings, any coins or tokens earned, airdropped, all the rest, and this whole growth in this DeFi area is only going to amp up the questions of this kind. And so we had tried to raise a few of the questions in terms of, okay, fine, if we have entities operating truly as a banking alike entity out there, how are these entities, there we go, actually going to treat assets on their books, right? Assets held for other external clients, assets held on deposit, assets that are actually lent out, and then how any earnings linked to these assets are going to be treated. Now, there aren't any clear-cut answers yet on any of these issues, including how these coins and tokens being actually governed could impact their external valuation ultimately. But these are items that anybody out there trying to offer any assurance, audit, tax, advisory services on really do have to keep a eye on, because I believe, as all of us have observed, everything can move awfully fast in this space. And there are some other questions out there in terms of, okay, fine, how do we translate this information in terms of the audit process, right? So the whole audit conversation around blockchain and crypto overall is still pretty much a open item. Now there have been dozens or hundreds probably of white papers written on this by the Big Four, other firms out there. There really aren't any clear-cut guidelines as of yet that are crypto specific. And so really what all of us are trying to do is to try to say, okay, fine. So the audit process, right, for all of its faults, and I think we all know that the audit process is not perfect, but the audit process actually serves a very important role, right, to the external marketplace, policymakers, investors, creditors, all the rest. So then how do we fit this whole idea of DeFi into a traditional audit process? And so then what we had tried to do here is to try to point out just a few, again, of those items out there. Again, obviously not trying to offer guidance in any way, rather to simply highlight and point out just a few of the open questions and the open items out there that anybody really operating in this space or trying to operate in this space or trying to offer advice in this space really has to keep top of mind. And as the whole conversation around DeFi tokenizing assets, pivots from being so purely digital to a combination of digital, physical, tangible assets, all of that is only going to introduce some more questions and more open items out there. And then, just a few of these sort of best practices, right? In terms of, okay, fine, if we have a firm trying to operate in this space, they actually might outsource a handful of those core processes and sort of core functions linked to it. And so we did point out a few of them here, including the wallet management, again, the KYC, AML compliance, payroll, bookkeeping. So from an audit, advisory, assurance point of view, your work and conversations uh, might to bring you to interact with 3, 4, 5 different companies for even a otherwise kind of basic external client. So it's always a good idea to sort of keep that in mind too, that even though a firm could be entering the area, wanting to be involved, they probably are not going to be able to handle everything on their own. And to wrap up our paper here, this whole idea on, okay, fine, even if all of us know and our clients know how this is actually going, how do we best try to communicate this information out to the marketplace in a manner, one that is understandable, and two that is transparent. And so in point 8, basically right here, what we had tried to do was to point out a few of the items that are starting to bubble up as items and considerations that anybody in this space, right, whether from a firm onboarding point of view or from an external from trying to audit it or offer assurance on it, has to be aware of, right? How do we accurately and transparently communicate where the actual funding for these operations comes from, right? Because as of, I believe it was May of 2021, there were over $100 billion in assets, right, in total value locked for DeFi operations, right? Where does that come from? Who is the owner? How does it flow? How do we track that? Items like that are going to become more and more, let's say, pertinent to our conversations as more and more entities sort of operated in this space, and then even non crypto native firms try to use and to try to capture the benefits of these operations. And so that really sort of wraps up our primer here, in terms of the items and the outlook that we all thought were sort of worth trying to keep an eye on here. Obviously, it's a very fast-moving, fast-paced area that has changed quite a bit, even I would say just in the last 18 months. And so I do always want to say, it was a group effort, team effort, and everybody here was really a pivotal part of trying to capture the core points and to try to condense and to try to present really a complicated topic in a manner to be understandable and to actually be useful, right, for all of us, and to hopefully serve as a basis and a good primer for a introduction to this topic, DeFi, which arguably is the most fundamental change to the broader sort of crypto asset space since Bitcoin actually burst into the scene back in 2016, 2017. And so with all of that, I am going to wrap up our podcast here for June 2021. Thank you all so much again for tuning in. And if you have not had an opportunity, please go to WSBA.co and have a look at our DeFi Primer white paper. Thank you all so much.